Hi everyone, this is Ramir Khan with you, and I would like to welcome you all to this very important session at the AFE Summit, which is eKYC in capital markets, applications, regulations, and most importantly, the overall larger potential. Me, Namir Khan, I'm the chairman of the MENA FinTech Association, and I've been closely watching the space when it comes to capital market itself. And I can definitely tell you it's one space that is buzzing, it's one space that has been talked about by not just fintechs, not just by the banks, by the investment managers, but not by the regulators only, but largely by every single person that you basically come across. And that has a lot to basically do with the recent developments that have happened in the past 12 months. Now, with this, I would just like to basically mention to you that we have a fantastic session over here today, which includes Mr. Khaled Kurdiye, Martin Jansen, Umar Abdul Wahid, Hussam Badr, and Pooja Singh. Now, we have a fantastic representation, as Mr. Khaled is basically representing ADIB Securities. We have Martin and Tisal, we have Umar from Valify, and again, Hussam from Deraya Financial, and Pooja from SCA. So I would like to basically kick off my discussion right away quickly with Mr. Khalid. Mr. Khalid, I mean, you have been engaged in this, in this entire industry, in this entire vertical for the longest time. My question to you is that capital markets have seen some of the most erratic developments lately, globally and in the region, as you would know. Now, my next question to you is that more uptake of users have come in. What have been the most common changes that you have seen in terms of volume or changes largely that you would like to highlight over here?
Thank you, Namir. Good afternoon, everyone. Basically, the common changes that we're seeing in terms of the prices of equities globally has been rising, yet that is also driving the trading volumes higher. If we take, for example, the largest market in the world, the US market, it has grown from about 7 billion shares a day to roughly 15 billion shares traded on a daily basis. So you're almost talking about double that amount in the last couple of years. The retail investors have also been coming in at a very large scale across most equity markets regionally as well as globally. Okay, we used to basically count on our retail investors to be at about 20 to 30% or maybe 35% on a global average. Now, this shift has been changing in recent years, where retail investors are coming at a very large scale and impacting the markets, as we have seen over the last 2 to 3 months in particular, when the retail investors had come in on GameStop, etc., etc. So overall, volumes have been increasing, and the value obviously has also been rising on the equity prices.
Thank you very much. That's a very good point. As you mentioned, volumes have been raising. Now, Martin, I mean, before we take a deep dive with you on that, we have seen the volumes have been changed, as mentioned by Mr. Khalid, the volumes have been increasing rapidly. However, on the same side, there is a significant shift, I'm sure, in terms of the behavioral changes that you may have seen in the global capital markets. Could you please share some light on that?
Yes, thank you, Namir. I fully agree with what Mr. Khalid said before. Now, for the shifts in the global or the behavioral changes, I would focus more as well on the retail sector. What we've seen is that the accessibility to stocks globally has been or is on the increase, actually. So that it's much easier now for consumers to trade stocks, be it through direct offers from brokerage houses, be it through fintechs, be it through apps like the so-called Robinhoods and Schwabs, etc., etc. Now, the easier access is driven to some extent, or this comes on the one side, it's a positive sign that volumes are going up, frequencies are going up, etc., but it also comes to some extent at a cost. We've seen some behaviors from a behavior perspective which have to be watched out very closely, because one of the key drivers for getting more users to stop trading is offering a limited offering, because just reducing complexity, offering only fewer selected high name or just high quality stocks in terms of more the famous stocks, to get more attention from consumers. Now, this leads to, on the one side, to one effect which is called herding, where you have more and more people follow each other's following rumors, and you have these herding effect, which of course can lead to some kind of an extreme case to bubbles. And on the other side, having the attention more focused around selective stocks and picked stocks just takes away the whole diversification effect on a portfolio level, which leads to actually higher losses on a consumer level and lesser profitability from a consumer perspective. So therefore, it's on the one side a very positive sign that there is more access to capital markets for consumers. But as mentioned, there are some effects which have to be watched out very closely, and where on the one side, companies, brokerage houses, and the regulators have to see to put the right incentives in place that this growth doesn't come at a cost that is actually too high on the other side.
Very valid point. So, I mean, easier access, you mentioned having limited offerings, and of course, then we're looking into reduced margins as well. Now, that increases the dependency a lot on digital. And I would now come to Omar. Omar, Verify speaks of, remote onboarding. So can you please briefly touch on the point? Is the region typically ready for this right now to be able to enable all of this?
Yes, well, firstly, thank you for having me. But so just to dive deep into it, definitely the readiness of the market isn't just dependent on the regulator alone or the service providers alone or just the users alone. I think it's a collective readiness, and due to what we've seen over the past year and a half, whether it's right before Corona or what happened due of the COVID-19 pandemic, we see that everyone right now is asking for remote onboarding, for digital registration, having that access and that reach. So in terms of readiness, I do believe that the market is getting ready. So we have regulators we've been talking to, whether it's with the FRA here in Egypt, which is in charge of the capital markets. We have the central bank, we have the NTRA, we have major regulatory bodies talking about how eKYC is mandatory right now. It's not just because of the government direction, but it's also due to the fact that a lot of demand and a lot of market need is being portrayed from the market itself right now. We have customers talking to banks, we have customers talking to brokerages, and how Robinhoods are currently beginning to happen in the region. So we just see that there is a spotlight on electronic KYC or digital onboarding, and how all stakeholders right now have it as a major point to be talked about and to be regulated in order to move forward within that track. So definitely, if it's not ready, it's getting ready, and that readiness is coming from different sectors and different regulators, and all of those points come collectively together in order to make a sustainable digital registration process, which can be applicable not just in the capital market, but in the regulated sector overall.
Thank you, Umar. And so basically, so here we're talking about, more about like a demand-driven innovation that's currently happening at this point of time. I mean, rather than just being dependent on the other factors, it's very demand-driven too. Now, Hossam, coming to you, what has been the noticeable change that you have seen towards investing in the region? And have you seen a shift in demographics, or have you seen any sort of shift in the way investors have been investing, a change in investment style? So
thank you, Namir.
Yeah.
And good afternoon, everyone. Hope you're staying safe and healthy in these challenging times. Back to your question, Namir. Most of the countries in the region are on the lower end when it comes to individual savings rates. Lately, we've seen a lot of effort from the regional governments to encourage, citizens to preserve and grow their wealth by saving more. But a lot of citizens who are stock market traders have realized that it requires a lot of experience and dedication to be able to make money by personally trading in the stock market. So in a nutshell, they'd love to procure investment management advice as opposed to management of wealth through self-trading, but traditionally an investor wouldn't be able to tap into investment advisory offerings such as DPMs unless he or she is a high net worth individual. Due to the limited capacity of human investment professionals within the APs, and of course due to the relatively high minimum management fee charged by the APs. However, lately we've seen the introduction of investment vehicles such as robo-advising and thrift saving plans to address such challenge. I don't want to go into detail, but we probably all know what robo-advising is. It's a certain class of financial advising that provides financial advice or investment management online with moderate to minimal human intervention. This kind of arrangement promises or brings services to a broader audience with a considerably lower cost compared to traditional human advice. Same thing with thrift saving plans. These are defined contribution plans where both a company and employee contribute a certain amount of cash every month towards an employee's retirement account. Again, this is just encouraging individuals, retail investors to put their money in the hands of professionals rather than risk trading in the stock market. So to summarize, the introduction of services such as robo-advising or thrift savings plans in the region by several players is gaining a lot of interest from retail investors and starting to have a lot of support from the government.
Great. So, I mean, that's a very valid point over here in terms of new style of investment and new players who are also coming into the space. Now, I mean, Pooja, coming to you now with all of this information that we have acquired, I mean, from a regulatory perspective, I mean, we have seen more volumes, more shift towards digital with newer platforms coming into play, platforms that are not into financial services, stepping into financial services as well. And it's not a choice anymore. So you do see a larger demand in terms of, people heading towards, capital markets at this point of time. But as a regulator, what have been your key regional findings as you have been a key observer, key participator, and a key enabler of the entire environment?
So good morning, good afternoon, and good evening, everyone. From the regulatory perspective, the eKYC and the digital identity in the region has evolved more due to global mandatory policy standards. To mention a few, there is a FATF requirement which requires risk-based approach for due diligence, which is supported by Basel for banks. Its recent guidelines regarding strict supervision of WASP, which has been announced just last month. It further supports eKYC and digital identity, which is now going to be mandatory for UAE and across many of the GCC countries. There are many other policy standards which are mandatory, which actually mandate digital eKYC. For example, the G20 high-level principles of digital financial inclusion, principles on identification for sustainable development developed by World Bank Group. In fact, the UN Sustainable Development Goals, they require UN member states to provide legal identity for all, including birth registration by 2030. As per the World Bank classification, most of these eKYC or digital identity platforms can be functional or they can be foundational. As per our study, most Arab countries have a national system, a national ID system in their country with detailed laws around protection of data. However, there are many still following the physical KYC structure, requiring face-to-face interaction with physical documents, onboarding, and verification. Bahrain and UAE are two countries with fully operational eKYC structure in the region. Jordan, I understand, has recently started implementing their JOPAC system, which is part of their national financial inclusion strategy. Saudi Arabia has its guidelines on digital-only banks, which has now going to be paving the way for eKYC and digital identity in the region. Apart from this, there are many other countries who are having the system, which are in the process of developing the system. As per my understanding, there was a study conducted by Arab Monetary Fund last year on eKYC and digital identity. In that study, in the research they did, they have found out that many countries have identified, they are exploring implementation of eKYC using technology, using blockchain technology. There are also countries who are evaluating eKYC through their sandboxes. Apart from this, we also have many functional providers, many functional eKYC providers in the Arab region, which are basically private players. Hence, what I see all across from a regulatory perspective, that eKYC or digital identity is being adopted there are different stages of its adoption. Some countries have a fully developed model. Some countries are going to be there soon.
Brilliant. So, I mean, with this, I mean, what I would like to basically take out from, your point that you've actually mentioned, is that the regulators have been complying to as the world is opening up and as digital is basically spacing out more and more gaps with the existing system, we do understand the fact that there's more stringent compliances that would come into play. Now, at one side, we have more compliances that are coming in. On the other side, we have the inclusion of digital services that are also becoming a part largely of our ecosystem, right? Which enables us to execute all of this a lot more in a seamless fashion without causing much friction. Now, over here, I mean, I would like to come to you, Mr. Khalid, on your point of view, what is Adib's strategy Adib's security strategy to cater to retail investors, considering the fact that on one side, we have a large opportunity, we do see an influx of new retail customers, but on the other side, we also see a list of compliances that need to be adhered to as well.
Thank you, Namir. Listening to what Omar, Hussam, and Pooja and Martin had to say, it's pretty much aligning ourselves with the rest of the industry. What I think is being a single market and single segment focused does not work anymore. To survive in this globalization era that we're in, one has to make their entity and their business much more accessible to clients, no matter where they live. So we started some 15 years ago, focusing on the Dubai and Abu Dhabi financial markets, and being a Sharia compliant focused firm, we saw that as an opportunity to go into other markets, such as the US and Saudi, and take this specialization of being Sharia compliant into these other markets. So the other facts that have been mentioned by Hussam, for example, on the robo-advisory, because times are changing. Obviously, the typical financial advisor who used to look after your portfolio now has been, I don't want to say replaced, but there is more sophisticated tools out there to do that job for you, where it will take into consideration a lot of aspects of investment and take basically the emotional aspect out of the picture completely. So therefore, we're going to look at those tools and how can we bring these tools to our clients. The retail segment has significantly been increasing. We're seeing a lot of youth coming to our doors asking. We're actually hosting a webinar soon for the youngs with their parents, of course, trying to introduce to them the concept of let's say, not conservative, but responsible investment. So therefore, they don't go into the area where the game, attitude, where they're playing a game rather than investing and end up burning their fingers at an early age. So the idea is to introduce what proper investment strategies, even at a younger age, where they can take it on forward with their life. So basically, the last item is the eKYC. This is really important because for us to be able to access the clients that are residing anywhere around the world, we need to have a system in place. We need to be able to identify these clients, avoid any hot waters or any hot areas where we can get burned from. So therefore, if there is a proper system that is facilitated through the regulators and the markets, where it can be shared across the brokerage community worldwide, I think that would be a great time to start it right away.
I mean, very valid point. And Martin, on this, with this, I'll come to you. Like, I mean, do you see at this point of time Or maybe I would like to know, I mean, any examples of fintech companies who are redefining, I would say, eKYC in this space.
Okay, I just mentioned one name, it's Walify. So they're sitting here with us on the panel. So I think they can give us first-hand experiences of how to do this. But for the eKYC, I want to highlight also another point actually, which we think is very, very important to, which is building on what Mr. Khaled said. Now, Mr. Khaled said there's a bigger surge also of youth coming into the market, etc., and there's the need of a strategy. What we see is many brokerage houses and firms actually, they need a strategy which caters for the complete customer journey, because having an eKYC is it's not only about the onboarding part, it's not about only KYCing the customer, but for us actually, when we look at it and when we work with our clients together, we help them to build a much more sustainable customer journey, because for two reasons. On the one side, yes, there is the need to onboard customers as soon as possible and collect all required information. But on the other side, for the customer, if before you do the first trade and before you have the first look and feel of a platform, you get shocked about how much information you have to give out before you actually can start using a project. So one of the big success factors for the future will be a smartly phased KYC process, where you require the initial information that is needed, that you can give people the first look and feel, they can try it out, they can get a little bit the hang of it, how do I do it? And then when they start, okay, now I'm familiar with how this platform works, how this runs, and I want to go into the real trading and actually trade with real money, then you can actually require more information. But this way it's very often actually a 0-1 approach. So either you're KYC'd or not. So we see this actually a much more phased approach. With this comes a big advantage, because for us, at the end of the day, from a retail strategy perspective, you need to attract the consumers. You need to onboard them. This is where the eKYC comes in. But this is not it, and this is unfortunately where many stop in their retail strategy. They get them on the platform, and then they simply lean back and watch. But we think actually it's much more important to engage them later. So after attracting them, onboarding them, to engage them. And engaging them is, on the one side, educating them, but also then providing them the right tools and being constantly actually close to them in terms of analytics, observing them, giving them feedback, giving them guidance, etc. So therefore, for us, the eKYC is, and the future of eKYC and the smart companies who build their eKYC, they don't only focus on this one short period of time and, okay, I'm on board and that's it, but they use this much more as the entry point to communicate and engage the customer, and use this as a continuous staying engaged and keeping customers actually happy, just focusing on customer experience and to smoothen the overall customer journey. And not only, I don't like to cut the customer journey into pieces. Now it's only eKYC. No, it's part of a bigger picture. It's part of a bigger strategy. And we think only those players who look at it holistically will be the ones actually who really are successful in the future, with also having clients on board that create sustainable additional value in the markets.
Great. Omar, with this, I mean, there's a point that comes to our mind, right? I mean, no matter how small or how big the information, there is an inherent risk of identity fraud and, maybe service misuse. How is Valify tackling this?
Yeah, well, I think definitely there is a risk. However, we are talking about digital or remote onboarding, where you don't have to see the client face to face. There is no physical presence. There is no physical interaction with the client. So the process of securely making sure that that person is in front of you and he's the person who they claim to be, all of those steps are currently being shifted to a digital channel. But of course, as there are shifts with technology, there are also some precautions that can be taken and some collaborations that are mandatory for us to make sure that this process is secure. So what does eKYC entail as a technology? So it's just validating who that user is, validating the documentation, the official documentation, whether it's a national ID or a passport or so on. But there does come a point where you need to interact with other government authorities in order to validate this information. and also try and use already existing infrastructure, for example, such as already done physical KYC. Can you leverage that or not through the eKYC experience? So, for example, if you already went through the experience of physically getting a SIM card from a telecom operator, can you leverage that point or that point of interaction in order to validate your eKYC later on? So that's how we can work around those insecurities, or making sure that that system is secure enough in order to be able to say that, okay, I can validate my user's identity on this platform, and I don't have to worry about it that much if I take the correct precautions. So those correct precautions or those extra steps that need to be taken isn't just dependent on what eKYC technology is availed, for example, by Valify. Is it just facial recognition? Is it liveness detection? Is it data extraction from a national ID? It's not just all of that. It's also coupled with integrations with government databases such as the National Registry. It's integration with the telecom operators or national regulatory authorities such as the NTRA here in Egypt, where you can validate the ownership of a phone number linked with a specific national ID. So just having those layers on top of each other and understanding that it's not just one step and it's not just one set of technology, a technology stack that you need to rely on, but you need to rely on all of that in order to make sure that the experience end to end is secure. And just to add, touch upon what Martin just said, we have some clients over here in Egypt, especially in the capital market, working on the way exactly what Martin was saying, that it's not just, it's not a one-step process, and it's actually a multi-step process, and it's layers of verifications. And the first step would be just to get you on as a user and let you try out our system. And based on that experiment or that experience that you had with our solution, that's when we can take it a step further and get to know you more, and what types of markets are you interested to invest in, and all of that. All of this creates a digital identity or a digital fingerprint of who you are, and that's what makes us certain of who you are later on down the experience.
Great. So Hussam, I mean, taking this example of what Umar had shared on what's typically happening on the Egyptian landscape as well, can you share some light on what have been the core development when it comes to KSA in the kingdom?
Yeah, sure. Thank you. So all businesses, you know, especially financial institutions and banks are experiencing a drastic process of digitalization. And digital transformation has been part of the most relevant changes in the last decade. And those who forget this task will just lose opportunities or even disappear. And you know, with the pandemic situation, we've seen some clear examples in the region and worldwide of companies growing exponentially while others disappearing. The difference was how well they were prepared to offer their services and products through digital channels during the lockdowns. You know, with eKYC, the identification and verification of the identity of the clients occurs immediately, and in addition, you know, the process increases the customer satisfaction and ensures that the client can make use of the service from the first moment, as Omar and Martin just mentioned. In addition, of course, to the huge reduction in the cost of opening new accounts. Now, in the Saudi market, to be exact, the government has commercially, as with other regional governments, provided APIs for services such as ID and national address verification to verify the identity of online users. Also, you know, with e-financial credit checks through SEMA are available. You can integrate with that as well. A lot of financial institutions are starting to integrate with these services, which is good news. The government also, I must say, should perhaps look into providing other similar services like, you know, work address verification, because this is now needed a lot. Biometric verification, you know, if we go a little bit further with our ask. Now, the bad news here is that this is not going to be satisfactory for the regulators. The regulators have also other things in mind, like AML, extended due diligence, PEP identification, and they expect that financial institutions perform rigorous checks on these items and report financial crime. Now, these tasks can now be automated, for example, by using integration with worldwide sanctioned screening software like WordCheck, and also applying some cutting-edge technology such as Omar said, video verification. And here I'm not talking about selfies, I'm talking about video verification that is approved by the regulators. Electronic signatures, this is very important as well. Artificial intelligence, intelligent rules engines that connect the dots and identify discrepancies in the information provided by the customer, and obviously machine learning. So in a nutshell, we're moving in the right direction with regards to eKYC evolution, but we still have a long way to go.
Namir, you're mute. Namir?
For that, apologies for that, everyone. So Pooja, coming to this, like in terms of like more users, as we can see, we have more pressure in the capital markets as well. And then we have new user onboarding as well. What are some of the steps that the Security and Commodities Authority in UAE has taken to facilitate this? We would love to learn from you as well.
Thank you, Nabil. I'll basically highlight 3 important steps which ESCA or other has been taken both at the regional and GCC and Arab level. One is the UAE Pass, which is UAE's national digital identity and eKYC platform, which has been established in UAE, and it is open to citizens and residents. So what ESCA has done is basically we have made this UAE Pass mandatory for all the service providers who are registered with us, as well as it is also mandatory for anybody who's dealing with ESCA. So it's needed for licensing, for registration, for all our supervisory purposes. Second, to facilitate KYC and digital ID across the Arab region, as to what Hussam just said, we feel within ESCA that there is a need to fast track more RegTech and subject adoption across the Arab countries, which has to be much more in a collaborative manner, which should cover financial inclusion, KYC, digital identity, supervision, identity fraud, data security. I mean, the list goes on. So what we have come to is ESCA, along with Arab Federation of Exchanges, Bahrain BOS, Central Bank of Bahrain, FinTech Galaxy, we have formulated a working group across Arab region as a RegTech and SebTech group for Arab region, which is undertaking research on how to facilitate adoption of some of the best practices from Singapore, from UK, in RegTech and SebTech. We already had our first round of discussions and webinar, which was held last year. And currently we are working on drafting a working paper in this respect, which is almost in the final stages, and we will be announcing it very soon. The third important step, which ESCA has taken recently with our Ministry of Economy, we'll be running a hackathon, innovation program on the FinX 22 platform, to further the development of the fintech industry in the UAE. This program is planned to start in April and will run throughout the year. It will include hackathons, innovation challenges, workshops, and trainings. One of the theme on this program is digital identity. So these are some of the recent steps we at ESCA, more from the regional perspective, we are trying to initiate to smoothen the adoption of eKYC across the region.
Thank you, Pooja. And with this, Mr. Khalid, I'll come to you, back again to you. Like eKYC largely, we've discussed it late. All of us have been discussing it for the past 34 minutes. But largely, eKYC, you have seen it, an evolution, I'm sure, of how eKYC or KYC from eKYC and now digital KYC and digital identity and new terms as we speak are emerging, right? Do you see this as a challenge or an opportunity? And I'm sure you would not just say it's a challenge, nor it's just an opportunity, it's a blend of both, but how differently do you see it, right? And as a key player, do you see an opportunity of collaboration with newer technology players? And if you are looking into it, then typically, what is that if any technology player is looking to partner with an institution like yourself should look into before even, considering to approach a large institution like yourself?
Thank you, Damir. Well, one thing for sure is that we're not short of technology firms knocking on our door every day with the latest that they offer, and it gets confusing at one point in time. To me, the eKYC concept is like not having a smart TV at your home and trying to watch your Netflix show or so I think eKYC will become mandatory at one point in time, where the concept of one person walking into a brokerage firm or a bank with a passport and simply saying, this is me, will no longer be valid, because that does not really vet or verify anything. I can walk in with Omar's passport, maybe I don't look as handsome as Omar, and say, this is me, but that's not gonna work anymore. There has to be a much stringent concept to be adopted to vet and identify individuals. So ultimately, just like when we pass through Dubai's airport, Abu Dhabi's airport, with the eye recognition, with the facial recognition, this is becoming to where no one is going to stamp your passport as you exit and enter a country. So the point here that how will the regulators and how will the markets in the Arab region collaborate to really make it a reality? Because unless, let's say, in the GCC region, where Saudi and the rest of the GCC nations can put together some sort of system, at least there are a lot of similarities in terms of the systems and the ease of transfer between the GCC countries. But then you can go into one further step further into the Arab markets and look at what can then become a common ground, so that you make it much easier to do like a pan-Arab vetting process, where you can easily onboard a client from Egypt and for an Egyptian brokerage firm to onboard a client from Jordan or Palestine or from Lebanon, etc. And that has to really soon start and become the real concern, because I look at the competition. When my clients come and tell me, well, look at what Interactive Broker is offering, and look at what the Saxo Bank and the Charles Schwab, etc. It's putting us at a disadvantage in this region, not being able to practice what these other firms are practicing. This is why I said earlier, we cannot remain a single market, single segment companies. We have to go into the globalization era and start looking for ways to compete as businesses with our counterparts in Europe and the US and other countries around the world. So to close on this item from my side, I think it's a must, and it's something that it has to happen. Otherwise, it could really mean survival for us.
But that's a very valid point coming from you, considering, I mean, there's an opportunity in place as well. At the same time, that how seriously you as an institution are looking into it. Thank you, Mr. Khaled. And Martin, I'll come to you. The current and the next 3 years for the region, do you see the same cycle that we saw in the Western markets? You see the same cycle that the region is going to go through, or you see some shifts considering the regional dynamics are different?
There's one very, very important point I'd like to mention here for the region in general, and this is having a bit of a bigger view. And I liked actually very much what Pooja said, for that there are programs to train people to get this actually with hackathons, etc. ongoing. Hossam mentioned digital transformation is very important. Mr. Khaled said that, yes, there's more and more technology firm coming. Now, there's one big question behind it, which actually is not yet completely answered. This is the bigger commercial model behind it. If I look into, and we just recently did a study for all brokerage houses and stock exchange houses in the Arab region, the average contribution of data and information services is 10%. Whereas when you look to the more mature markets in the Western world, you are speaking between 30 and 40% contribution is actually around data and information services. This means in the Arab region, we are overly positioned on transaction fees. This means we think that it needs a bigger strategic shift from the whole commercial model in order to facilitate digital transformation, because with digital transformation comes also the expectation of lower transaction prices. So if I lower my transaction prices, I need to make my profit from somewhere else to invest in future technologies. So this strategic, this is a little bit where the Arab region has to play a little bit of catch up, where positioned well, but again, it's 10% versus 40% contribution of data and information. So monetizing data and information, having a different commercial model will be key as the high-level strategic direction for the next years.
Thank you, Martin. And Omar, I mean, role of RegTechs, like not just in the Egypt market, but in the wider market. How should we keep up with the pace in the capital markets, regionally? What is your viewpoint on this?
Yeah, well, firstly, I would say that we need to first define what is RegTech and what's the role of those startups. So mainly RegTech startups are mainly focusing on facilitating the process or interacting with regulatory requirements, making sure that everyone has this ease of access to those regulations and those frameworks in a streamlined position. And that being said, we need to facilitate the process of RegTechs and their communication with the market, with the regulators, in order to make sure that those this facilitation towards those regulations are implemented in the correct way and based on market needs and market demands. So my response would be that the role of RegTech is to see is to make sure that they are working on specific problems that are required by the regulators and how to facilitate and make the process much more efficient and cost effective when it comes having that access, for example, for fintechs and their regulatory compliance or digitization of the financial sector, whether it's in the capital market or the banking sectors and so on. So how can we make that shift and how to facilitate that process of shifting from the regulatory requirements to digital transformation and making sure that you are compliant with all those requirements. And that is the role of RegTech. So just making sure that there is a communication or a translation layer between the old ways and the new ways and how digital transformation can be implemented in a secure and safe way.
Thank you, Omar. And with this, Hussam, how do you see the products being redefined and evolved in the space?
Thank you. So let's agree that innovation is the only way a company can break free from the pack. And instead of looking within the accepted boundaries that define who we compete with, we should also look across them by doing so we can find unoccupied territories. And this is exactly what so many startups and fintechs are doing. They are exploiting inefficiencies in the financial sector and causing a lot of disruptions. And we should expect that they will continue to challenge our business models, the incumbent business models, if I may call them, and offer current services in a new way. I'll give 3 examples of this. And some fintechs are now offering complete state-of-the-art end-to-end eKYC solutions with AI capabilities, with machine learning capabilities, and all what the financial institution needs to do is integrate with these capabilities to be able to make use of such service. Another example is social trading platforms. These are platforms that allow you to follow the trading strategy of a certain individual, quote unquote advisor, and mimic his or her trades automatically in the market in exchange for some kind of fee, monthly subscription fee, or whatever you want to call it. We've already seen this in the international market, as you all know, with the likes of eToro, and we will start seeing similar offerings, at least in Saudi Arabia, very soon. Another example is trading platforms. So, today, the more advanced customer wants to trade using his platform of choice. This could be a third-party trading channel or even an Excel spreadsheet with macros that he developed. How can you convince this customer to open, a trading account with your company if he doesn't like your trading channel? A possible answer is that you allow him to trade using his favorite platform by providing easy-to-use, publicly available APIs that connect his platform with your system. And a final example is all what we heard of, and we'll be seeing, I'm sure, very soon in our region, is zero commission trading. So this has been going on in the US for some time now through the likes of Robinhood. So zero commission trading is a huge disruptor for the existing APIs. And it simply means that brokers, as Martin just said, brokers need to find other sources of revenue from the customer to be able to survive. These are just 4 quick examples of what is coming our way, and we have to recognize and manage These are definitely exciting times for the stock market.
Exciting times, correct, Hussam. And with this, Pooja, I mean, coming to you last few words on how do you see the overall eKYC space evolving? I mean, I know I may be asking for too much, but then maybe in the next 12 months, because the last 12 months have been quite transformational for every single one of us, personally and professionally, and also in terms of regulations. How do you see it shaping up in the next 12 months specific to eKYC? And anything all of us who are basically a part of the panel and people who are tuned in listening to it should be, looking into quite carefully.
So I'll begin by answering what Khalid mentioned. I'd like to point to a certain information. There's a GCC standing working group on financial technologies. It has been studying. It has all the GCC regulators on board. This group has been studying implementing an eKYC across GCC. As per the meeting last year, they are in the process of implementing the working group plan, which has an integrative initiative to develop a GCC KYC through fintech. So if that comes through, I don't know whether it will be 12 months. I cannot comment on the timeline. But if that goes through, then we should be seeing something similar to an establishment of a unique legal, which is acceptable across GCC, a digital ID, eKYC, which has focus on data. Such a system should be taking very minimum information and should be creating an identity or an eKYC, which is compliance with global standards. As to what smart KYC, I heard one of the panelists mentioned. Also, given the structure of this region and the available skill set we have in this region, such model it will be like an in-house model, or it can be a public-private partnership or an outsourcing model. So if this goes through, I think we will be finding answers to many questions or many discussions we've been having across this panel.
Thank you so much, Pooja. Thank you, Martin. Thank you, Hassan. Thank you, Umar. And most importantly, thank you, Mr. Khalid, for taking out your time and educating us with all your key insights and inputs regarding a very important subject. The world is changing, and so is, eKYC, and so are the terms that we keep learning every single day. So, I mean, it was great having you all in this session. For the audience, I hope you enjoyed this session, and I'm sure you will enjoy the upcoming sessions as well. Thank you very much. Signing off. And in case if you have any questions of any of these panelists, I'm sure that all of them are available readily on LinkedIn as well. So reach out to them. Pleasure, connecting with you all, and all the best to the AFE team. Thank you very much.
Thank you so much, everyone. Thank you, Namir.
Everyone.
Thank you.